Welcome back, traders. This is Spencer with Numbers Up Finance. We are back with a market wrap video for Monday, April 29th, 2019. Starting off this video, as always, we're going to be taking a look at SPY on the daily time frame. We can see today that SPY closed up 0.16 percentage points. Very little movement in the green direction, but what is significant is the fact that we created a new all-time high on SPY. We can see today that we made an all-time high of 294.45. So if you take it on face value, we've created a new all-time high. That's pretty significant. But what you have to keep in consideration is the fact that the previous all-time high back here was, let me see, 293.94 is what it's saying. So that means that we are about 50 cents above the previous all-time high. So a very little amount. That's well within a fraction of a percentage point. So that's that. We also made a new all-time high on QQQ today, I believe. I'll take a quick look at that just to show you. Yep, new all-time high today, 191.32. But again, this video is going to be pretty short because not a whole lot happened. The same themes that we've seen are just continuing. And pulling up SPY again, I'll go over those themes real quick. And what we are seeing is on multiple time frames, momentum is heading downwards, but we just are waiting for a significant sell signal or a significant buy signal. Right now we're seeing price compression. The price is not moving anywhere. Every day that's a green day or a red day is a fraction of a percentage point. We're not seeing the volume spikes that we want, and we're waiting for that to happen before we can really get a good grasp at where the market is going to head from here. It's a possibility that from this point on we're going to consolidate for a while before pushing up to more impulsive and more significant all-time highs, rather than just coming up and breaking the highs by 50 cents. Maybe we'll keep pushing up into the 300s and keep going from here. Or maybe the bears are going to start to take control of the market, which they have not had for many months now. But it remains to be seen. We're waiting for indicators both sides of the deal. But on SPY, I'll just make it real clear what I am seeing right now in the charts, and I'll go through the multiple different time frames just to show you exactly what I mean. But right now on the daily time frame, we've been saying this for many weeks now, is that we have bearish divergences in play. We've said these divergences, they're not to be used as buy or sell signals. They're just they're indications of where the momentum in the market is heading, if that kind of makes sense. But we've seen for quite a while now that the momentum is heading downwards, but the price just keeps squeezing and squeezing up. It keeps inching up, a percentage point at a time. We're not heading anywhere in a hurry right now. And look, if you take this on face value, this momentum, this would lead you to believe that the next leg is going to be downwards, not upwards. And we've seen this before numerous times, is that these divergences can be foiled where this momentum could start to push back up again, and then the price would not be divergent anymore. Taking a look at the 180-day 4-hour charts, we can see something very similar. Very near time frame over the past couple of weeks now, we can see that on 4-hour charts we are creating very similar bearish divergence. The momentum is going downwards, but we continue to just creep and creep upwards. And then the last one I'll go over is the hourly time frame, and very similar story. Let me just remove that. But you can see again, over the past couple of days we created a bearish divergence on the hourly charts. And maybe this will play out. Eventually one of these has got to play out for some amount of pullback, but we have not seen that for quite a while now, a couple of weeks since we actually had any real legitimate pullback in the markets. We've just been crawling up and up and up. But that's unsustainable. At some point we're either going to have some sort of consolidation period where we have flat trading, or we're going to have some sort of pullback to work off of the overbought conditions we are in now. And one last thing to talk about on SPY that I want to mention before we move on is the volume, and we've been stressing this for a while now about how this breakout past this triple top level that we've had has been followed by relatively no volume. Low volume usually means when you get these significant price movements that are technically significant and they have lasting power, you like to see the volume spike with them. If you don't see the volume spike with them, it doesn't necessarily mean that the movement is not valid, it's not significant. It just means that it has a very much higher rate of failure. And so what that means is, since we've been moving up here, we've seen the volume absolutely plummeting. What this is, this volume chart that I have here, we have a moving average, a 5 moving average, so this is the weekly time frame, so this is the moving average for the past 5 weeks of the volume. As we can see from the December low, the volume has just been going down and down and down and down. At some point this volume is going to spike, and when this volume spikes, I would expect some amount of reaction one way or the other, and we'll lean towards where the technicals are pointing us. But we have to see this volume start to spike up before we're actually going to be expecting any movement. Moving on to crude oil, and we mentioned this Friday about how crude oil has been lock and key with the broad markets. And so if you're seeing crude oil start to have an impulsive sell-off, that might be an indication that the markets are seeing a possible imminent reversal or what have you. Now, it obviously did not play out that way for the sharp leg down that we had Friday, but it's still certainly something to keep an eye on. And what we see today in crude oil is that we're coming up. We impulsively broke this wedge. It looks like we might be coming up to back test it, or perhaps even cross back above the support line and regain the trend that we've been seeing. Not a whole lot happened today. We kind of inched up about half a percentage point, so nothing too significant, just like we saw with the markets. But certainly something to keep note of and keep your eye on. And then the very last thing that I'll leave you guys with before I end this video is nat gas. We brought up Friday about how there was the potential for a bear trap in play, meaning that we broke below this all-important 2.5 level on the futures, this 2.5 level support. We broke through it, we came back, we back tested it. It looked like a very opportune point to sell due to the various different technicals. Support once broken usually becomes resistance, and that looked to be confirmed here with this reversal. Actually, it's not a reversal, it's just a back test of a resistance. But what we've seen now is that we sucked in the shorts got stopped out now. We've pushed back above this resistance line that is now being back tested as a support. So again, fairly objective entry to go long. This support line has been a significant line of support for many, many years now. It just recently got broken. However, that break has been faded very quickly and very impulsively. And very quickly, I'll just take a look at the daily time frame just to show you the momentum. But what we can see on the MACD, if I could actually pull it up, momentum sharply heading upwards, whereas the price was divergent from it. The price is heading downwards. And another thing to take into account is that we do have a very strong bias signal in terms of this moving average. This is an adaptive moving average, but does a very good job on the daily time frame for showing the various trends. You know, when is a good time to get in and when is a good time to get out. Aside for up here, where it was incredibly volatile, but since then, since we've consolidated back down, we can see it does a very good job of defining the trends when it's moving downwards. The price is always below that moving average, but then we break over it and we have a significant period or a significant thrust up. Consolidate, we break back below it impulsively, and then we push down, down, down. And these past couple of days now, we've seen that we've broken above this moving average. And so the pattern has been for weeks and months now is that when we're above the moving average, that is a very strong signal that there's more room to move upwards. In addition, we've broken a significant resistance level that is now being tested as a support. So very favorable risk to reward, and there's very strong technicals in favor of longing nat gas right now. But we'll see. There's no guarantees in the market. We know that. But I'll leave that there. This has been Spencer with Numbers Up Finance. If you like this video, please leave us a like, subscribe, or anything that can, any feedback that you can give us is greatly appreciated. We're not exactly sure what we're going for now. We just know that we're passionate about doing this, and we want to make sure that we are putting out the best quality content that we can. So make sure you keep your numbers up.